Let's explore the topic of quarterly tax payments now. Business owners do not have taxes deducted automatically from their income. Instead, they are required to make estimated tax payments during the year. Self-employed individuals and many small business owners must pay quarterly if they anticipate a tax liability at year-end. Estimated payments rely on projected annual income. Many people use their previous year's tax return as a reference and modify it according to current income trends. Neglecting these payments can result in penalties and interest charges. Paying quarterly helps you avoid hefty tax bills later. If you offer taxable products or services, collecting sales tax might be necessary. The regulations vary by state and can depend on the customer's location. To collect tax legally, you must register for a sales tax permit. It's crucial to note that sales tax does not constitute your income. You're simply holding it for the government. Filing deadlines differ by state, so maintaining organization is key to avoiding penalties. Keeping your receipts organized will streamline the tax season. This practice assists you in claiming accurate deductions and simplifies tax filing. Many business owners choose to scan receipts and utilize cloud storage. Accounting software also enables receipt attachments, ensuring everything is consolidated. Establishing simple expense categories such as marketing or travel quickens tax preparation. This also assists in monitoring your expenditures. Set up a habitual schedule for reviewing receipts. Weekly or monthly check-ins can eliminate last-minute stress during tax season. Lastly, building assurance regarding business taxes centers on establishing habits. Tracking expenses, making prompt payments, adhering to sales tax regulations, and maintaining organized records will alleviate your tax season concerns. These practices lead to improved financial choices for long-term stability. Now that you understand how to manage business expenses and taxes, take the initiative. Get organized today. Feeling perplexed about business expenses and taxes? Let's simplify it. A deductible business expense refers to a cost that is both ordinary and necessary for your business operations. Ordinary implies it's common within your industry, while necessary means that it aids in the smooth operation of your business. Decreasing your taxable income results in a lower tax obligation. Common deductible expenses vary, including office supplies, software subscriptions, marketing costs, and professional services. Additionally, you can deduct travel expenses related to business, work equipment, and specific training or educational costs. Some expenses, however, are partially personal. Phone bills, internet, and vehicle costs frequently fall within this category. Only the business portion of these expenses is deductible. Keeping detailed records will help determine the deductible percentage. Remember, the IRS mandates proof of deductions. Always retain your receipts, invoices, and payment confirmations. If this video helped you understand accounting a little better, don't forget to like, share, subscribe, and turn on notifications for more accounting tips and guidance. See you in the next video.